Hey everybody, it's Greg Pasity, and on this episode of View from the Ranch, I've got a very special guest joining me today. It is legendary investor John Thomas, otherwise known as the Mad Hedge Fund Trader. John, there he is. Hey
There
John,
I
how are you?
am. Can you hear me?
I can hear you, John. Thanks for being here. I appreciate it.
Great. Well, thanks for inviting me. Always nice to have a fun event to look forward to when the market closes.
That's right. And, John, you have such an interesting background. Like, I really want people to get to know you, what you've accomplished, which is like, I mean, I would imagine like your obituary down the road is going to be like a full page ad. You've done so much. And, you were like one of the first, pioneers of the hedge fund industry. Is that right?
I was. I started my hedge fund in 1989 when there were only 20 such funds in the world, and people like George Soros only had $400 million under management.
Oh, wow.
And Julia Robertson was just getting started.
Yeah. And then you had an amazing, unbelievable track record with that, 1,000% return. And
yeah, we went up 10 times in 10 years, and then I sold the fund 4 months before the dot-com crash.
And then you got into right at the bottom of the oil and natural gas market. Boom. Right?
Yeah, we a few people knew about fracking in the late 90s. I was one of them. Yeah. So we would go around Texas buying depleted oil fields for 2 cents on the dollar, and then fracking them and getting out twice as much natural gas as they had before.
Mm-hmm. And then you sold that at the top after that.
Right, got out of that. Well, yeah. We got a double on the gas price, but gas eventually went to $17 a BTU, mm-hmm. And then crashed with the Amaranth bust. And that took it from 17 down to 1.
Okay. And then you took some time off, right? And then came back into the equity markets, like in some new fashion, actually, back in 2008 at the last bottom of the stock market. But this time, which I thought was really cool, is that instead of working for big institutions or the most wealthy, you decided that you were going to share your knowledge. You're writing what's now known as the Diary of the Mad Hedge Fund, and it's for like the average investor, right? I mean, it's different than your previous roles.
Well, I actually was going to start up a hedge fund in 2008. Mm-hmm. And then when the crash happened, half of the investors lost all their money with their other investments. Mm-hmm. So I decided to convert this from a hedge fund into a newsletter. I'd already been writing the prospective investors in the hedge fund every day. So I just thought, well, let's put this up on the internet and see if anybody will buy it.
Yeah.
And I actually sold one subscription for $25 for 1 month in the first month.
How many subscribers do you have now?
About 6,000, and that's at $3,000 a year.
Yes. Yeah. I mean, and John's like, it's, if there was like the most interesting trader in the world, your face would be on it. He's like the world traveler. I mean, gosh, how many countries do you think you've been to?
137.
Oh, geez. Yeah. I mean, and just marine combat and desert and pilot in Desert Storm. You hike, you climb mountains. It's, just an interesting background. And
yeah, well, I tell people my life is only half over and the best half is ahead of me.
That's awesome. That's awesome. So where did the name Mad Hedge Fund come from? Was it someone call you that Mad Hedge, or is it just because you're always kind of going against the
Well, it goes back to my Morgan Stanley days. And whenever I came up with a new trade, they would say, "Oh, you're mad." Like buying Sony in 1982, mm-hmm. Or buying Honda in 1982. People said you're crazy, and they had a tendency to work out. Honda and Sony went up about 100 times in dollar terms over the following 10 years. And they actually had a contest on the trading floor at Morgan Stanley among 200 traders. If you pick the number one performing stock of the year, you won a $5,000 pool, and I won that prize 2 years in a row.
Nice. And then now, John, his newsletter, it includes it includes a daily letter. You've got a technology letter, you've got a biotechnology letter, and then also like an options trading strategy. And that options trading strategy has averaged like 34% over the last 11 years, which is the best really track record of any newsletter that I've ever seen. So
actually, we're up to 37%.
My bad.
Blowout September.
Yes, that's awesome. And also has like a long-term portfolio where he'll pick, you'll pick stocks like Tesla, right? Back in what was that, 2010?
Yeah, we bought Tesla at 1650.
Yeah.
At the split adjusted $500 price, that's a return of 150 times.
And you're a Tesla driver.
And I got Tesla number 125 off the assembly line.
Yeah.
11 years ago, and I've been driving them ever since. I'll never drive another car. I'm on my 4th Tesla now.
That's awesome. And in your spare time from all this, writing every day, and you even wrote a book back in 2016 called the Stocks to Buy for the Coming Roaring 20s. So I wanted to talk a little bit about that. And, the premise of that book was you had mentioned that there was this intergenerational arbitrage. So if you
right. If you can go back into markets 1,000 years, and you see the same 40-year cycle continuing, and nothing has changed in that 1,000 years. It works in 20-year legs. So do the years 1929, 1969, and 2009 have anything in common? Can you think of anything that happened in those 3 years?
Just massive sell-offs.
Gigantic stock market crashes.
Yeah.
Those are all exactly 40 years apart. What happened 20 years after each stock market crash is we got an absolute boom in stock market prices. So, we got the after 1929, you have 1949, and that began a 20-year bull market in stocks that ended in 1969, or actually 1973 with the onset of the OPEC crisis. If you go up to 1969, what happened 20 years later? Well, you had this tremendous boom in stocks going on, triggered by the Reagan reforms and the first look at quantitative easing. And of course, that then crashed 20 years later in 2009. So where are we in these cycles now? Where the last bottom was in 2009, that was the dot-com bottom. And we are halfway through one of those 20-year up legs. And we've already risen more than 400% off the bottom of the last leg at 6,500. And we have another 400% gain to look forward to over the next 10 years. And that takes us to Dow 120,000. So we're actually halfway through, in terms of percentage gain, the move from 2009 to 2029 by going from 6,500 to 29,000.
I mean, it's hard to even comprehend saying Dow 100,000. I think when I mention that to anybody, it's like so out of their thought process that that's something that's attainable within a decade. But if you look at what happened in the 80s and especially you had mentioned talking about this demographic boom that's occurring right now, and then combined with the technological advances that you're always writing about, it certainly could be in the cards and very real. And you said that may even be a low mark, I think.
It could be, because now we have 10 times the technologies that we had in the 1990s. The last, bubble top was driven by technology. We basically had everyone buying PCs for the first time. We had everyone using the internet for the first time. And we had cheap software. We had Windows 3 you could buy for $50. So the combination of those three provided the technology springboard to get you that 20-fold return from 1982 to 2000. Well, now we're looking at another 20 times return, except this time we have 10 times more technology drivers than we did in the 90s. We have quantum computers. We have gene editing, CRISPR technology. We have super fast computers. We have AI. We have electric cars and all the data they collect. So there are a huge number of drivers. So my 120,000 may be low, and a lot of long-term forecasters also are telling me that's a low number. But I have enough people disbelieving the 120,000 number as it is, so I don't need to push it.
Yeah, they're calling you mad.
Gain over the next 10 years.
Yeah.
What's so big about that? That's exactly what we've done over the last 10.
Right. Well, that's, I can, you talk a lot about like that exponential growth. I think you mentioned, some of like a friend of yours who wrote the book about exponential growth and how fast it just keeps compounding. And so it's this, like the future is near, right? That's the,
that's why Warren Buffett called his biography Snowball. Earnings snowball year after year as the dividends keep increasing and the stock appreciation keeps increasing. And that's always going to be true. I mean, that's the only really free lunch that you have in investing is reinvestment of dividends. Excuse me.
Yeah, we're located in Florida, so we're big dividend investors. Although a lot of our clients end up living off those dividends and spending them, and although the pool is a little bit smaller in the in some of the tech sector for dividends, but there's still plenty of opportunities there for riding out the some of that technology wave and still getting a good income from their portfolio. So we're always working hard on that. And I've been following John's research for quite some time now, and always seem to get some good ideas from you. And how about housing, John? I mean, what's your take on the housing market? It's heating up again. Interest rates are at all-time lows. Do you feel that the housing market, are we getting close to another bubble, or do you still see?
Oh, no, we're only halfway through the current bubble.
Okay.
The housing bubble started in 2011. And I can tell you the day it bottomed here in California. Since then, prices have doubled. But what drives the markets over the long term is demographics. When you have large numbers of big spenders, consumers age 40 to 50, you have great bull markets. And when you have low numbers of big spenders, you have very weak economies and weak markets. So we're just entering a period of time when the millennials, of whom there are 85 million of, are entering their big spending period. And that's 40 and onwards. And when you have a lot of big spenders, the house of prices goes up, furniture, home construction, anything even remotely related to housing just goes through the roof. And in fact, one of our core holdings for the last couple of years has been Home Depot as our way of cashing in on that.
Yeah. I know, like my generation X is like 65 million, and so that wave of 85 million coming in. I know in our area here in Florida, they're building houses as fast as they can, and you know, they're leaving the markets super quick, and they don't seem to be stopping. So it's pretty amazing to see.
Yeah, well, you have, you know, half of all the new home builders who went bankrupt in the 08-09 crash never came back.
Mm-hmm.
So you have a structural shortage of home construction right when you have a record generation trying to buy those houses. So, you know, housing demand far outstripping supply. In that situation, prices can only go up, and this has another decade to run. So, you know, I have friends buying places now, you know, not in the big cities, but in smaller cities like Reno, Austin, Texas, Charlotte, North Carolina, and so on.
Mm-hmm. Yeah. Definitely a good long-term place to look. I also wanted to get your opinion on, you talked a lot about solar energy and you know, obviously solar energy had its bumps in the roads, but seems to be getting a lot cheaper and a lot more mainstream. What's your thought? Do you still feel like solar energy is going to take the lead in
well, as of yesterday, it's going to be illegal to buy a gasoline powered car.
I saw that.
In California after 2035.
Mm-hmm.
The state is required to have 100% of its grid from alternatives by 2030. So I'm already there. I have a 59 panel array. I have 3 Tesla Powerwalls. So we're totally grid independent and just are connected to PG&E so we can sell our excess power to them. You know, we go to an all solar grid literally in 10 or 15 years. And the play on that has been Tesla. You don't want to get involved in the solar panel producers because that's a fairly low value added product. I mean, you're just literally painting some silicon on top of some aluminum and putting electrodes at either end, and there's your solar panel. So, you know, if the solar market takes off here, it tends to get flooded by the Chinese with cheaper competitors. The Tesla is the ultimate solar play, and I power all of my Teslas off of the solar panels. So I think that's going to be the future. Every high-end house is going to have its own solar panels and its own battery system, so you can be independent from the grid at any time. That's going to be handy for people in Florida who have hurricanes all the time, and it's handy for people in California who have forest fires. You know, we had our grid shut off 6 days last year, and the solar system completely bypasses that.
You know, and that seems like that's going to be also a great accelerator, you know, cost reduction for a lot of companies that, you know, spend a lot on energy. What do you think? Like, how are some of these big energy companies of the world, producers, like, I mean, do you think they're going to be extinct? Are they adapting? Are they switching their business models?
Well, you know, if you sit down with the management of one of the 7 sisters, you know, the big oil companies, they'll all tell you, oh, well, you know, we may be gasoline independent, but not for another 50 years. You know, I'm thinking more like 10. So they better find another line of business or they will go bankrupt. The smaller ones, you know, the fracking companies, the sand companies, all the peripheral plays in energy, they all will go bankrupt or just cease doing business because there's nothing else for them to do. At least the big companies have enough engineering expertise where they could get into the alternative business if they wanted to. And they have the cash to do it. They could go out and buy all the solar companies in the country out there now and rebrand themselves as alternative energy companies. Right. And some of them will do that. Others will just stick to oil to the very end.
Okay. Yeah, good. So you're not a big oil investor then. So
Well, I was in the
yeah, you made your money on that already.
you know, we've seen uh, a fivefold improvement in battery capacities over the last 10 years. That's going to improve another fivefold in the next 10 years. So electricity run cars will be far and away cheaper than gasoline ones. The government isn't going to need to mandate any of these dates, drop dead dates saying you can't buy a gasoline car after X. In fact, gasoline cars will be 5 times more expensive than electric cars, require no maintenance for life, and can get repowered at your home.
Yeah, it's hard to beat for sure, and better, for the environment and so many other reasons. So, I want to talk a minute about inflation, because that's always seems to be a hot topic. The Fed has come out and said, "Hey, we want inflation to increase," and you write a lot about how there's so many deflationary forces because technology is making everything more efficient. What's your view on inflation? If that's something that investors need to worry about, and if so, is gold still like that ultimate hedge, or is it you're just better off investing in stocks for your inflation play?
Well, a few weeks ago, the Federal Reserve said, "Well, we're going to run the economy hot, and we don't care if inflation rises over 2%, as long as the average inflation rate doesn't go over 2%. Well, that's kind of like saying, well, when I fly by flapping my arms, I promise not to go more than 100 miles an hour. It doesn't address the issue of I will never fly by flapping my arms.
Got it. Yeah.
Technology is improving so fast and is in fact accelerating that it just wipes out any chance of inflation at all. And this year has had more inflation killers than ever with the pandemic. People don't fly to meetings anymore. They go to Zoom. They don't use gasoline as much as they used to. There've been price destruction on every front this year, except in restaurants. If you can get a round trip ticket to Chicago right now for $60. That was $600 a year ago.
Right.
So, anywhere you look, there's just been massive deflation through technological advances, and that's increasing. It's not decreasing.
When you brought up COVID, and of course that's on everybody's mind, when do you think we get to the other side of this, where the economy starts opening again and things start getting back to a little bit more normal? What's your take on it?
Well, there's no doubt that the vaccine has been made a political issue.
Yeah.
In this campaign. There's no way you're going to get a vaccine by election day. If they did have a vaccine, you wouldn't want to take it. You wouldn't want to bet your life on it.
Right.
The vaccines that are coming out quickly have had all animal trials thrown out the window. All kinds of other traditional safeguards have been abandoned. So you essentially become the petri dish in the first round of vaccines that are coming out. I don't think we have an actual vaccine for at least a year, if ever. It could be like the flu, where, we get flu shots every year. Every flu shot has a soup of 5 different antibodies in it, and it still doesn't work half the time. That may be the best that we can get with a COVID-19 vaccine. That said, they were able to develop an Ebola vaccine in a year, and that is another coronavirus. So you might get lucky. There's just no way of telling right now.
And do you think that COVID changed anything as far as your outlook for stocks, or maybe?
it accelerated my outlook, and that it brought the future forward much faster.
Yeah.
The rate of technological advancement essentially increased 10 times with the pandemic. You've had millions of businesses just change their business models overnight, many of them with great success. So the future started happening fast once everybody was shut down.
Yeah, it almost feels like technology is now the new traditional blue chip stock that that your mother and father always held. It's where back in the 90s the tech was considered risky, but this seemed like to me just to uncover about how needed and dependent and how secure it is versus a lot of other things that are a lot exposed out there to things like the pandemic.
Well, and we have had technology as our core holding for 10 years. Occasionally we'll dabble in banking or airlines or some of the domestic plays, but it really has been an all tech, all biotech portfolio for 10 years. And I don't see that changing. Technology is accelerating at a tremendous pace. In a few years, we'll have flying cars. We'll have Teslas with 500-mile ranges. There are all kinds of things coming down the pike that people pay a big premium for.
What sectors within technology, if you want to share that, that you talk about a lot, that people could focus on as like these are the areas within tech that you see a lot of growth over the next decade?
Well, the chip sector is kind of in a sweet spot right now. It's been selling off for the last month, but if you get an actual economic recovery next year, then you have a global chip shortage developing. And as 5G comes on, everything in the world is going to need more chips, from cars to your local breadbasket. So Advanced Micro Devices is the cheapest one in that sector right now. They're currently overtaking Intel when it comes to better designs and efficiencies in production.
Gotcha. Yeah, and you had mentioned graphics cards and cloud-based stocks and big data.
Yeah, we've already gotten a 10-bag move out of NVIDIA, so I'm not inclined to chase that one. And AMD is only a $90 billion company, and NVIDIA is already a $310 billion company. So,
my son told me he wanted NVIDIA's new card came out, and he waited till at midnight to buy it. He said it sold out instantly, and then they were selling them for triple on eBay after that. So they're definitely a big demand, that's for sure.
Well, I went to get a new range extender because there's some corners of my house that have poor internet reception. And after a ton of research, I found the right one, and they were sold out. Or delivery 2 months, and even that's probably a stretch. So that's happening with all kinds of technology products now.
Yeah. The demand is certainly there, and the growth of their earnings have certainly been much faster and better than the market as a whole. So definitely a core type of seems to be a core holding that people who want long-term growth. The technology is an innovation types of companies is certainly a great place to put some money in over the long term. And you did mention biotech, so and you have some pretty interesting thoughts, I thought, about gene therapy and how we're going to be able to deal with things like cancer and stuff, and how technology has really accelerated because of artificial intelligence. And if you could touch on that a little bit, I think people would, I thought it was very interesting.
Well, the COVID-19 has kind of obscured the fact that drug companies are making tremendous advances, not only on COVID-19, but on 100 other diseases as well. And I believe that within 10 years, all major human diseases will be cured by just taking a pill, literally. With AI, you can have a supercomputer design a molecule to kill a specific cancer cell, and then have a lab mass produce those cells. And the way you get the cells made is you insert DNA segments into viruses and infect the person with a virus which carries the good gene. I mean, it's just one of many monoclonal antibody technologies. So customizing treatments to the individual will be a big growth area in the future, and using AI is another one.
Yeah, it's just incredible, some of the opportunities.
You'll make it to 100, maybe 150.
Okay, gotcha. And you more than anybody else I know, like your calls, like you're being able to see forward, and to get on a trend while it's just starting to happen, or being able to see it. What kind of advice would you have for people to, I know you've 50 years experience, but like, what kind of got you on that, getting really good at that, seeing changes in trends and not looking backwards. I think a lot of us kind of look to what has already happened for, ideas, but you're just so, you've done such a great job of looking forward. And I know you read a lot. What kind of advice would you have for people like to, be more kind of against the crowd? I guess you've never been a big crowd type of a guy on investing.
Well, I tell people it's really very simple. Research in, profits out. That the more research you do on a sector, the more confidence you'll have in your conclusions, the more money you make trading. Fortunately, I'm a person who's blessed with having an interest in absolutely everything all the time. My parents tell me a story when they gave me an alarm clock, a wind-up alarm clock, when I was 5 years old, and I took it, picked it up, and smashed it on the ground so I could see how it worked. They never gave me another alarm clock again, and I'm still trying to figure out how things work. I've always been let's go find out what's on the other side of the hill guy, and you do that long enough and you end up in Albania or China during the Cultural Revolution, or in Cambodia fighting insurgents. You always go over the next hill. Well, we're always looking for the next 10 bagger. That's basically how I spend my whole day, looking for the next breakout technology where you get these super ballistic, stock moves. And we've had quite a few of them over the years. We've had Tesla, we've had NVIDIA, and now I'm looking for major moves in the currencies. We think the Australian dollar can go from 50 cents to $1. That's a double over the next 3 years. We've already started that move. We think the US dollar will crash because of massive overissuance of US Treasury bonds. So we think the bond market is a short here. Even though interest rates are low, sheer overissuance is going to crush that market. So we're selling every rally in the Treasury bond market, for example.
Gotcha.
If you cover all asset classes, and we cover stocks, bonds, commodities, precious metals, foreign currencies, energy, real estate, there's always something happening somewhere. And if something looks dead, you abandon it and go to the other asset class. In August, we wouldn't touch the stock market because it was so overvalued, but we were shorting the hell out of the bond market, and selling short the dollar and buying gold, and all those other things worked.
Yeah, well, it's someone can really learn a lot from getting your newsletter. If you want to find out more about John's great research on technology, on biotech, and his trading strategy, you can go to the Mad Hedge Fund Trader.com. and we've been subscribers for many years. And John, I just want to really appreciate you taking the time to come out here. I'm a big fan of your work, and I appreciate you taking the time to meet with me online here. So hopefully we can do it again.
All right. Well, thanks for inviting me on, and
all right,
good luck and good trading.
Thanks, John. I'll talk to you later.
Okay, bye.
Hi, I'm Susie. Welcome to Ranch Capital. I'm going to take you around our office. You can meet our team members and get to know everyone at our firm. Ranch Capital is a financial planning firm, and we're here to help our clients reach their financial goals. Our mission is to offer dependable advice with meaningful results. This is Brad. He's our Chief Investment Officer. He's in charge of overseeing our investment portfolios. And this is Gregg. He's president of Ranch Capital and one of our certified financial planners.
Hey everybody, thanks for checking us out. Hope to see you soon.
All right, welcome to Ranch Capital's studio. This is where we film a lot of our videos for our clients. And here we have Abby. She's one of our financial advisors and Ramsey Solutions financial coach. This is Alyssa, and she's one of our certified financial planners as well. Thanks for stopping by. If you're ever in need of financial planning services, feel free to contact us anytime.